All right, let's get right into it. Every single year, every taxpayer in India faces this really critical choice. A choice that can either save you or cost you thousands of rupees. We are talking about the old versus the new tax regime. And in this explainer, we're going to break it all down so you never make this costly mistake again.
So let me just ask you straight up. Could you be paying too much in taxes without even realizing it? I mean, it's a serious question because for millions of people out there, the answer, unfortunately, is a big yes.
And look, we're not talking about a small amount here. Just imagine paying an extra 50,000 rupees in tax. Not because you earn more money, but just because you picked the wrong option when filing. That's a real figure, and it shows you exactly what's at stake. And that leads us right into the heart of the problem, doesn't it? This hidden tax mistake. It really all comes down to just how confusing this choice can be. So let's figure out why that is.
The scale of this thing is just massive. We're talking about lakhs of people every single year making the wrong call. And you know what? It's not really their fault. It happens because there's just no clear, simple guidance out there that says, hey, for your situation, this is the one you should pick.
Now here's where things get really interesting and, frankly, a little urgent. There's been a major change. The new tax regime is now the default option. That means if you don't actively choose something else, that's where you'll end up. So doing nothing could literally be costing you money.
Okay, enough about the problem. Let's talk solutions. We've got two regimes, but you only have to make one choice. So let's break them down piece by piece and make it all make perfect sense. First up, we've got the good old tax regime. Now, on paper, the tax rates look a bit higher, but, and this is a big but, it gives you this really powerful tool, deductions. So by making specific investments and paying for certain expenses, think your Providence Fund, medical insurance, your house rent allowance, you can actually lower your total taxable income. And the logic is simple, right? The less income that's taxable, the less tax you pay.
And then on the other side, we have the new tax regime. This one is all about simplicity. The tax rates are lower right from the start. So what's the catch? Well, you have to give up pretty much all of those deductions we just talked about. It's a very straightforward system. Lower rates, but no extra benefits for making those specific investments or expenses.
And this right here shows you the core trade-off perfectly. With the old regime, you've got those higher rates, but a ton of deductions you can claim, which of course makes things a little more complex. And then with the new regime, it's simple. Lower rates, but say goodbye to those deductions. Your entire decision boils down to this. What's more valuable to you, the deductions or the lower rates?
This brings us to the most important part of this whole thing, what I like to call the golden rule. This is the simple logic you can use to figure out, once and for all, what is actually right for you.
So, after all that, which one is it going to be? The one with all the complex deductions or the one with the simple, low rates? Well, the answer, as it turns out, is incredibly personal.
Okay, let's look at case number 1. Let's say you're someone who actively invests to save tax. You max out that 1.5 lakh limit under ATC, you've got your medical insurance, you claim a pretty big house rent allowance. Basically, you have high deductions. For you, the old regime is almost always going to be the better choice. Why? Because the money you save from those deductions will be way more than the benefit you'd get from the slightly lower rates in the new regime.
But what if you're in the second camp? Maybe you're just starting out in your career, you don't have a lot of investments yet, or hey, maybe you just want things to be simple instead of tracking a bunch of expenses. If you have low or even zero deductions to claim, then the new regime is probably your winner. You get that direct benefit of lower tax rates without having to jump through any hoops.
So here it is, the one thing you need to remember. This is the golden rule. Your deductions decide everything. Simple. The more deductions you can claim, the more attractive the old regime becomes. The fewer deductions you have, the better the new regime is going to look. It really is that straightforward.
All right, let's get to our final section, your action plan. Because the biggest mistake you can make here is to just guess. We're not going to guess, we're going to calculate. Here's your final checklist.
First off, a really important detail you need to know. If you're a salaried person, you have amazing flexibility. You can actually switch between the old and new regimes every single year depending on what works best for you. But if you have income from a business or a profession, you gotta be careful. Once you opt into the new regime, you can't just easily switch back.
So here it is, your simple, foolproof, 3-step process. Step 1. Before you do anything else, just list out every single potential deduction you think you can claim for the year. Step 2. Pull up an online tax calculator, they're free, and figure out your tax bill under both the old and the new regimes. And finally, step 3 is the easiest part. Just choose the one that saves you more money. No feelings, no guesswork, just pure math.
And that really just leaves us with one final thought. The single biggest mistake you can make with your taxes is to choose blindly. So the question I'll leave you with is this. This year, are you going to calculate or are you just going to guess? The choice and the savings are all yours.